It's April 1st, and the markets are going to open in about 10 minutes. And markets are expected to go up slightly when they open. Over the last 5 months, stocks have gone up really nicely. Year to date, the S&P is up above 10% in gains. The last 18 months have been excellent. The S&P over the last 18 months is up about 50%. These gains are great and they're fun to watch. But I feel like a correction is around the corner. I'm not sure if it's a week away, a month away. I'd be surprised if it was a quarter away. And the reason for it is corrections are natural. They come out of nowhere, and pretty soon you have a downward trend in stock prices. To get ready for that and to make sure that I'm not too greedy in some of these stocks, I'm going to be selling some shares to turn that investment into cash. Right now, cash is earning about 5%. You can earn a little more in bonds, but having that cash as dry powder for the coming correction is a good idea for me. I'm going to go through and share with you the stocks that I'm going to be selling. In some cases, I'm going to sell the entire position in a stock. In some cases, I'm just going to sell a portion of the position. And I'll share with you why each company is going to be taken out of the portfolio, or I'm going to sell some shares of that position within the portfolio. It's all about making money every single year for me. It's all about adjusting to the market and kind of a set it and forget it strategy. It's just not something that I do. I'm constantly looking at where the stock market's going, what's going on economically. Is the Federal Reserve going to act on interest rates? Is the economy in good health, bad health? And those are the things that I take into account as I buy shares and sell shares, as I move into a sector or get out of a sector. Some sectors are cyclical, meaning they're going to do really well in certain economic times. Some sectors are really bad for certain economic times. Taking all that into account, I'll be making moves in my portfolio, and hopefully they're the right moves. Who knows? I may be completely wrong, but my senses are that a correction is coming. It's just not possible for stocks to continue to go up and up and up. It just has never happened in history. And at the rate we're going, stock prices would just get incredibly expensive. I believe certain sectors are already really expensive. So for them to go even higher would just be outrageous. Let me go through some economic data first, then I'll share with you the stocks that I'm selling this week. All the major indexes are up year to date. The S&P is up 10.79%, which is a great rate of return for 3 months. The Nasdaq is up 10.93%. The Dow is up 5.55%, which is really good for the Dow. These are usually lower risk, traditional, historic companies in the Dow. The Russell 2000, which is made up of smaller companies, is up 5.55% as well. Over the past year, the S&P is up 27%, just an awesome rate of return. The Nasdaq is up 34%, and the Dow is up 18%. The Russell is up around 18% as well. And that type of return is great, but it's a little bit too frothy for me. If you look at the 5-year, you could see that we've had two major corrections in the last 5 years. We had one slight correction in 2023. So it wasn't too long ago we saw stock prices drop more than 10%. And that's what I'm talking about as I look at how the market is doing and am expecting a correction just because they happen. Stocks get priced really high. Investors want to cash in and lock in those gains, and they do so. So that's a little bit of what I'm doing this week with some of my stocks. Looking at sectors, the number one sector for 2024 so far is communication services. That's where Meta, Google, Netflix are, as well as other communication companies. That sector's up 15.57%, an awesome rate of return. Energy is really showing up because oil prices have gone up. Information technology is doing great. Financials is doing really well. Industrials have really shown up at 10.57 rate of return, and the S&P is up above 10%. The industries that are lagging in worst place is real estate and utilities. Discretionary hasn't been doing so well, even though in 2023 it did really well. Consumer staples are doing well, and 6.81% is great for consumer staples. Those tend to be really stable stocks that pay a dividend. Healthcare is lagging the S&P, and then materials is doing okay. Materials are also a pretty stable, low volatile type of investment. So overall, just things are really rosy. And that's part of my reasoning for trying to lighten up my portfolio and turning it into cash is this is just too good. It's too rosy. I expect that investors are going to begin to cash in and lock in some of those gains. And these investors typically are fund managers that want to show their clients that they're really performing well. They want to lock in those gains before the market takes a turn and then their performance is really hampered. So that's where we are with sectors. So let me go over the list of stocks that I'll be selling this week. And let me start off by saying that I think these companies are good companies and thought they were a good investment. And I'm just trying to get more cash on my portfolio so that I can have some dry powder to use. So when we do have a correction, I'm able to really buy into companies in a more significant way and companies that I believe in. First company on the list is AT&T. AT&T is a solid dividend payer, and I'm up about 4% on the stock. It's about $8,000 that I have in AT&T, and I'll be selling the entire position. I've got nothing bad to say about AT&T. They really have repaired their business. They've had a couple of really rough years. I think if you've held the stock for 5 years, you're probably way underwater. Tyson Foods is a good company, and they pay a nice dividend. I'm up 9% on the stock, and I'll be selling the entire position. I have a couple of food companies, so I'm good in that particular sector in that industry. So I think lightening up in that sector is a good idea for me. HP Enterprise is a really quick win. I started buying into HP Enterprise. I thought they were really discounted, and I'm up 13% on the stock. I've only had the stock for like a month and a half, and I'm buying more into technology. I have a good list of technology companies, roughly 8, 9 of them. And I think taking one out is a good idea. I have about $6,000 in HP Enterprise that I'll be cashing out and using that cash eventually to buy into the other technology companies. StoneCo's been a winner for me, and it's done really well. They're down in Brazil. I also own PayPal and other financial services companies. So I'd like to lighten up that investment and just sell $5,000 in StoneCo. Allstate has done great. I really like that investment because I really bought at low levels and I'm up 35% on Allstate. That investment's grown, and I'd like to lighten up my investment in Allstate. Prudential's been a really solid winner, and they pay a nice dividend. The investment's grown both by appreciation and investment on my part, and I'd like to lighten that investment by $5,000. The next one is Ally. Ally's been a good winner for me, and I'd like to lighten the investment simply because they do a lot of consumer finance, and the consumer may be in a tough situation going forward. So I'd like to lighten my investment in Ally. Next one is Elevance Health, and Elevance Health is a solid company. And the reason I'm selling about $5,000 of shares is that I'm buying into Cigna, and they're exactly pretty much the same types of companies. But I think Cigna has a really good proposition, probably more favorable than Elevance. So I'd like to lighten my investment in Elevance. And then United Airlines. I think United Airlines is making lots of money, just doing great. But investors don't like airlines. And I'm up slightly on the stock, 10%. I've held United for a couple of years, expecting that travel was going to rebound, and that happened. Expecting United was going to be really profitable, that happened. And there's awesome cash flow that's being generated by United, but the stock just doesn't go anywhere. So I've got a pretty significant position in United. So I'd like to lighten it by $5,000. If stocks really go down, airlines are going to go down in price. There's no doubt in my mind that that's going to happen. So lightening up on United, I think, would be a good idea. So collectively, this is what I'm going to do this week. I'm going to create more cash for my portfolio and really be careful in how much I'm buying in the month of April and continue it into May unless we start seeing a significant correction. So I'm an active value investor. I really use value investor principles and to value companies and really try to find good companies. I stray from that philosophy in some occasions when I really believe in a company, but their fundamentals are just not there. I have a few stocks like that. Roblox is one of them. I just think the business is really interesting, as well as a couple of others. But the majority of my stocks are value stocks. But I'm an active value investor. um, I hear a lot that people buy an investment and then they sit on it for 10 years, 15 years, and I think that's incredibly difficult. You think about investing in a stock and then waiting 15 years to see if it worked. That's just doesn't make any sense to me. What does make sense is buying a stock or believing in the company and analyzing that company maybe twice a quarter and reassessing: is their business doing well? Is their management team doing well? Is their industry doing well? Are the factors that I used to make that investment a quarter ago, a year ago, 5 years ago, have those factors changed? Should I be changing my investment in that company? All those things kind of go through my decision process as I decide to buy, hold, or sell stocks. I really appreciate you watching the video, and I hope you found it interesting.